Hello, hello, hello. Happy Easier Than Inflation Tuesday. How is it going, everyone? And the rally marches on. Sterling with the news. Good morning. Good morning, good morning, good morning. Good morning, Patrick. Good morning, Jacob. Again, thank you for your help, Jacob. Yeah, HD potential inverse head and shoulders. We'll check it out. We will check out HD was a beat and a gap up this morning after hit the 87.5. Good morning, Tony. So, how is everyone doing on this fine Tuesday in November? Good morning, Royal Palms. Thank you for tuning in as always. Oh, well, if you haven't heard, yet another gap. There, we're still in the. Remember, November is one of the bullish months of the year. So I'd be patient if you're trying to short this market. So let's see. Inflation expected zero point 0.3 coming in month over month 0.2. That's core. Year over year forecast at 4 to 4.1 coming in at 4. Inflation rate, just a headline inflation rate number expected 0.1. Prior was 0.4. This coming in flat at 0. Inflation rate year over year coming in at 3.2 versus 3.3. So red book coming in a little less than prior, but still not dropping below 0 yet. And we still have Barr speaking, Mester speaking, Goolsby speaking if they mention stuff about the economy or rates. So that's where we stand today. You'll see green, 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 green. Everything's green. Well, not everything. Exxon's not green, but a lot's green. And the mega caps are all green in terms of the sectors. Let me just refresh. Consumer cyclical. Well, that's going to turn out interesting because the consumer's waning in strength. But remember, the markets do not necessarily reflect the economy. They reflect people's opinion about things. And we're in go-go gadget mode. Real estate, technology, basic materials, and comm services, everything's higher today. Even energy's higher. So it doesn't matter. Just buy everything. Buy everything. Let's just refresh the rate hikes because these have been dropping. These have been dropping substantially. We have a cut now in May, and go away. But you see here pretty much, I mean, there is nothing. There is no chance. The market's saying no chance of any hike and a cut in May. That's where we sit. That's where we sit. So I don't know where we are in the soft landing versus hard landing versus no landing versus the lunar landing. I don't know where we sit anymore. I don't know why this is still in fear mode. I don't know why this is still in fear mode because the stock price strength has been, I don't know if something's broken, but wow. Home Depot again, beat after the close today. Nothing much that I'm looking at. Tomorrow, before the open, we got Target, Advanced Auto Parts are the main ones I'll be looking at. And then tomorrow after close, it's Cisco and Palo Alto. All right, who else is here? Good morning, George. Guess we should be grateful for our masters for only 2% more, 0.2% more inflation. Grateful to our masters. Oh, boy. Oh, boy. See, who else? Who said today? Who else said today? What else? What did was Barkin speaking? Where was that? Where was that? You know, oh shoot, I'll have to look. It said something like, again, it's not Fred's Barkin. There are risks from over and under correcting on inflation. I'd rather have them overcorrect, wouldn't you? At this point, can't we why do we have this friggin' 2% inflation? Get that crap off the table. Get that crap off the table. So, looks like today, we got a one-day pause yesterday, a breakout. It looks like we're going to close in the S&P above the 62.5. So, hey, we could easily tackle the high area from August. Next target, 4506. We're almost there. I mean, we could hit this today, 4500, 4506, and then 4570. There's some minor resistance here. We're taking off anywhere. I'm going to be seeing if we can sustain this into the open. Other than that, I mean, the strong thing. So it's a single I mean, look at this. Look at this. The way I'm handle stuff like this going into the open is I use the harmonics off this. And I'm watching the shorter term rotation zones, especially the 5 and the 15. But first area of support I'll be looking at is about 44.80 to 44.81.50, then 44.72, 75, so 44.73, and then I'll be really watching the 15 close in for 44.64 if we pull back. But in the short term, going in the open, I'll be watching the 5-minute rotation zone to see how it behaves with that. From a longer term perspective, from those percent B buys that seem so far away ago, from Monday, October 30th. Remember, I'll teach people before the end of the year what that is. So make sure you tune in for that. And by the way, if you want to help the channel out, you can consider doing any donations to the channel before then, any super chats, or just save them to the end of the year. Or at least if you're new here, subscribe and like the videos. I don't promote that much, but it does help. So that's what I'm looking at the short term. Other longer term is trailing mode. We do have cycles still at the top and very overbought. We have PPI numbers coming out tomorrow morning. Could we get a pause or a pullback? Sure. I'm more watching for after this strong move. You see this on the weekly. More if we do have more of a correction, it would be a sideways correction. Now, weekly cycles should start topping next week, so we'll see how it reacts going into Thanksgiving week. Remember, next week is a shortened trading week because it's Thanksgiving in the U.S. NASDAQ, same thing here. I'm just going to throw up the 1 hour. I'm using the harmonics just from this single candle. And if I could draw, it doesn't really matter when they're harmonics because they're reversible, remember, because they're 12.5% increments. But sitting at that first key level, 15,800, below that 15,768, roughly 1731. 15,696 to 700. To the upside, we've already hit the 87.5 area and the harmonic projection. We can't really go off any harmonics for right now. Technically, since we don't have a new pausing bar, you could do reverse. But I'm more so going to be watching this area right in here. We have a key gap open, some highs in that area. So right about 15,869 to 15,9 for a possible pause pattern. Other than that, longer term is still in trailing mode back from the buys on October 30th. Cycle still heading up on the NASDAQ, getting closer at overbought. Short term, this is really looking like it's a slop 1, 2, 3, 4, and breaking out to a wave 5 high to retest last December high area. I'm expecting us at the short term to exceed July's highs, even after a pullback. Now, anything can happen if something geopolitically happens other than that, but I'm still watching for that in the trailing mode. The Dow, I don't need to go over this again with the short-term harmonics, but the Dow also looks like it's going to close above the 62.5. Next target, 34,986 area. On a pullback, still the major support is 34,460. Dow overbought. Daily cycles getting to the top. Weekly cycles still running up higher. Russell, no, this is not a potential double top. It's not reversing enough of a move. Did not close below 62.5, and I'm even surprised at this Russell. But if the Russell does take out, takes out the highs 1797, which is corresponding with this high area from early October, then 1814, and then 1837. Those are the targets going up. If we, oops, I didn't want that one. I mean, the Russell, it's buy everything right now. Come on, give me the other thing. There we go. Give it to me. And you're sitting against the 37.5. And this, if we do really go through this, not today, but if this does continue through next week, could we hit that 18,283 area, close to that 200 and the 50% before rolling over? Yes, we could, especially with daily cycles turning up on the Russell and weekly still heading higher. Also on the weekly, you see here 50-week exponential still right there. So Russell, even if it continues, will be heading into a lot of resistance. VIX, no fear. No fear in the VIX, old VIXy. We have the now triple bottom continuation, potential continuation pattern. The double never triggered. So I'm going to be still watching for the VIX to drop closer back down to that 13 mark. The DAX in Party Central, watching for it to hit the 200 now. We had the little minor daily double top, which again never triggered, and now broken out to the upside against some high areas from the end of September and mid-October. But we have the 200 and a major breakdown zone overhead. So going to watch for at least price to stall out or pause up here. Other than that, again, there's no bearish setups right now, so it's just trailing mode from the bullish case. The sloppy on the notes hit the first target and the strong reversal because, again, this is really easing monetary conditions too, which should fuel a rally. So this rally might go longer into December at least. Next levels, and hitting the 50% minor retracement when everybody should know about that by now, that key level. 109.07, still a gap left behind virtually to there. So you have a gap left behind the 109.07 and the harmonic right there. So that's the next key target on a continuation move. And then 109.20 and a half. And you got a harmonic projection and a retracement at that level. So those are the next key levels I'm watching on a follow-through move. 10-year confirmed but never triggered. The double, and now the double is invalidated. That's why. Wait for that. I mean, if you're trying to front run it and it does not close to trigger it, you got to dump it. You can't try to carry it and say, oh, well, it might just, I wouldn't do that. Now, key close on this for the 10 years, 441, 449. So watch for that. You close below there, we could easily see rates continue to drop. I'm not, because this is downward sloping neckline and the flat neckline doesn't really work for this. I'm just using the harmonics for any pullback. If we do the projections from this low, we just reinforce that 62.5 right there. And so intermediate 4.33 and then 4.289. So this is the next key area, and that aligns with, look at that, harmonic and the prior top area from August. 10-2s, sideways after hitting the still. We could easily see it still go down a bit more and ease conditions even more. Dollar getting slammaroonied. Dollar cycles at the top and rolling over back to over sold areas, but there is no buy pattern yet. No buy pattern yet. So next level's 103.85, and then if it continues lower, about 103.20. Crude, we had, did I look at crude yesterday? I don't remember. I was too focused on other things, but we had this little sloppy double, which is now finished the levels. So interesting enough, crude rallying back up with this into the rotation zone. Next key area is, remember, contract rollover is actually in a couple days. So keep that in mind too. But the next target for me is about 80.40 to 80.50 should this continue. Not yet at daily cycle tops. Natty gas, not much going on there. Gold, we finished the double top, the head and shoulders. We paused there two and a half times pretty much. And now we had this little mini double, this little spike reversal. It was already in trailing mode, so that would have taken out anything on that little spike reversal before it launched higher. But gold, I think gold's starting to see still with gold's really starting to act stronger now, moving up. Where does gold sit? We're not at weekly cycle bottoms yet, and we're at daily cycle bottom. So this is a bounce. I'm watching for a more suitable longer term rotation, like a longer bottoming pattern before getting super bullish on gold again. Remember, though, we're in a long-term bull pattern, but this is standing out to me with inflation dropping. Now, gold is rallying. So does that have to do something with the U.S. debt also? That's what I'm wondering. Yen, with that dropping back away from the 152 area, so dropping in unison with the dollar. Nothing really to talk about right there yet. It has not triggered any bigger pattern. The euro finally completed the double. Took a long time, and now has hit that 200. So what is now, remember, this is a weekly advanced clear path move. Let's see what the next key areas are to the upside. The next key area would be 108.60, 108.62 area. And then above that, 109.65, but anywhere between 108.62 and 109.65, I'll be watching for a shorter term potential rollover play. I want to see how it closes today in reference to the 200. Pound, retackling the 200. If it breaks above 124.57, we're looking at the next target area close to that 50% harmonic, 125.89. These spiders and the Qs, let's see. Oh, Coco, you're back. All-time high. Why do you only come on when it's a strong bullish day? Let's see. What else have I missed? I missed a lot of stuff here. The XRT triggered daily double bottom is a great example of using harmonic retracements. So we can peek at that in a minute. Good morning, Richard. So let's see. The spiders. Next key target was 445.78. To remember, they closed above by a penny, the 62.5, and then we have 446.90 pre-market, 446.28. So I'd be looking at 445 for key support if it does roll over to, and that 445.78, then 445. But 446.90. Then if this does continue on longer term, 456.16. 456.16. Other than that, we can remove these now. I'd be looking at the S&P, and you can use the gap fill harmonics going into the open on that for the key levels. I'm not going to spend the time doing that right now. For the NASDAQ, 382.28 for the 87.5 rule, 383.80. So we're going to be above that level also. So that it completed the 87.5 rule. There's still technically a gap left behind to 385.65. So that would be my next key target. First would be 385 and then 385.65, and then roughly 380, upper 387 area. And then 389.40 is very key to complete. Remember, we did not hit from the weekly basis. We closed back in May above the 87.5, had the retracement pattern that did not invalidate it, so the 87.5 rule is still in play on the weekly basis, and that's at 389.40. So that's where that sits. What else? I don't have time to look at all this. What did I miss? How to super chat? Would like to. It's on the It's YouTube. Could somebody tell, who's ever super chatted before, could you let Richard know? Well, you got to follow your plans, Sterling. That's most important. Use a system, much less stressful, exactly, and follow your trading plan. And you're not going to have all winners. And some things are going to stop you out, then continue in your way. You know, that's just parts of trading. You do have the inverse head and shoulders on Home Depot. I'm really watching, though, this 304 level. Watching 304 first. Let's map out that you are correct. Inverse head and shoulders. Completely correct. That is a valid one. Completely correct. I got very smart people on this channel. Very smart people. It's going to break roughly with this gap up, it looks like. Yeah. So we're going to project it from here. The targets, 310, 316, 322. So that could, well, look at that. Could take it back to the breakdown, major breakdown zone. So keep an eye on that. Keep an eye on that from the weekly. Hit that 87.5. Last week was a %B buy, and now you're triggering a head and shoulders. There you go. There you go. Well, it technically needs a... No, I don't know why when I said triggering head and shoulders, Siri thought I said something more important. So that's where we sit. Tesla, strong day yesterday. Big gap up this morning, 233. We're trading above that. So next key target, everything's in raw mode, but 240.86 is the breakdown zone and the 62.5 harmonic. We close above there, we can continue to see a higher some more price action up in Tesla. And on the bigger double that was triggered that has not gone to stop reduction yet, let's take a look. It's roughly around 266.50 on a closing basis. So we'll have to still keep an eye on that level. But it's still raw go-go gadget mode. How's the pup? The pup is not eating, drinking, and went for a small walk today, but it's, you know, it's going to be any day. Still, as long as he can get up, wags his tail, and wants to do some things, you know, they generally let you know when it's their time to go. He had more energy yesterday than over the weekend, but if he won't eat anymore, then that's not good. Thank you for asking. Thank you for asking. Very sad for me. So that's where we sit right now. I don't have time to go through a lot of stuff. I've got to jump into the open again. Let's see. CPER. And LIT double bottoms on daily. Was that a valid double? That's right. I'll have to look at CPR closer. But there's your daily. Yeah, no, nah, that's a little iffy on that one. I'd have to do some measurements out. LIT is a clean doubled, has not triggered yet. So that's where that sits. All right, with that, thank you, everyone. XRT, let's look at that. XRT, yep, that came down. Retail ETF using harmonics. That one was one triggered, never got to the first stop area. Let's just verify everything. Not closed, but it's technically not invalidated. It's technically not invalidated, but not looking good. Needed the close below 59.08 to technically invalidate it. Did not do that, or to trade below 58.55. So we'll keep an eye on it. Not looking good. Gap up today. But those are the first stops. Now, if you're trailing early, you would have, wow, maybe you wouldn't have. If you take the actual low, you would. Ooh, it's close. But again, the rules I use are to trail once it hits that area of the first target. With that, I have to jump. I shall talk to everyone tomorrow. Thanks for tuning in. Bye for now.